Welcome to another daily recap for Thursday, December 21, 2023, the shortest day of the year and the first day of winter in the northern hemisphere at least. You are looking at a chart of the SPY or spiders, which tracks the S&P 500 index, and everything after the vertical dotted line is Thursday's activity in the spiders. I ran out of time this morning to make a preliminary video that showed these levels on the chart before the market opened. It doesn't matter a whole lot, I suppose, because the only two levels that the spiders hit happen to be two of the same levels from yesterday for different reasons. I did mention in yesterday's video that it's very unusual for the spiders to slice through a level like it isn't there. If and when they revisit that same level within a certain time frame that same day or during the next trading session the next day, those levels are worthy of being considered as support and or resistance on the next go around. And that's what you see here. Here's a view with the non-factor levels removed and the whole chart zoomed in a little. One of these levels from yesterday was not respected for even a minute, and the spiders fell right through it. I'll scroll back so we can see that this 472.45 level was not respected at all. The spiders just fell through it like a knife through hot butter. And the other level from yesterday was respected and provided a bounce. But both these levels got further confirmation with today's calculations and are therefore used again. And I like to call these levels recycled levels. So at 9:45 a.m. today, the spiders were between these two levels, and it could have gone either direction. So there were orders in the system to sell E-mini contracts if the spiders touched 472.40. I'll apply the 5-cent buffer, or to buy ES contracts if they touched 470.77. Sorry. Here's the 5-cent buffer applied for both. As it turned out, they came down into the 470.77 first, and that triggered the long trade in the ES, and a base hit was quickly reached, and the position was closed out well before the spiders got up into the zone at 472.40. So the short trade up here was triggered at about 10 minutes or so later, and that short trade pulled another solid base hit out of the market as designed. By the way, I realized after previewing the video from yesterday when I was explaining the maximum loss calculation that I used, that I said I trade a maximum of 2 contracts at each level. I misspoke there. I meant to say that 2 is the minimum number of contracts traded at each level. And that's why you see 2 contracts at the low end of the daily profit metrics on the tracking log. Not that it should matter too much to anyone how many contracts I might trade at a time, but the reason this is relevant now is because I'd like to point out that this other strategy I sometimes use where I scale out of positions instead of taking the whole position off at once is contingent on having a minimum of 2 ES contracts in play for any given trade. So let's take a look at this short trade up here a little closer. Sometimes you get confirmation that a level is going to be exceptionally strong. In the case of this short trade at the 472.40 level here, and there were other things I saw on other time frames, other charts that I use that added validity to what I was seeing here on the short time frame chart. So instead of taking the entire position out at the base hit profit target, I chose to take a portion of the position off at the base hit target and set a trailing stop at the break even for the remainder of the position. So sometimes you can pull more points out of the market this way. So this is why it's good to trade at least 2 contracts, multiple contracts at each of these levels. It just gives you options. In this case, going short with 5 contracts meant I was able to take 3 off at the base hit profit target and trail the other 2 until they were stopped out. So there was about 10 ES points possible in this trading using this approach. So that being said, either way, this short trade worked well and pulled more points out of the market. To keep things consistent with all the other trades that have been inputted into the log, today's trades are being recorded here using the all-in, all-out strategy. So 8 ES points for the day, a base hit for each trade, and a few more dollars in your account. That's all I have for today. Hope you found this information interesting and helpful. Have a great day. And incidentally, while I will go ahead and track tomorrow, Friday, I'm not going to trade, but I'm going to pull some numbers, run the calculations, and we'll see how that plays out. And then same thing for Tuesday, the day after Christmas. So back in the driver's seat on Wednesday, but have a good Christmas. Thanks.